Hi, and welcome to Sunday Night Charts. We take a look at charts to help you with trading week ahead. I'm your host, Steve Van Meter, and upcoming this week, we've got a short trading week and potential no stimulus package weighing on the markets. Let's get right into the trend indicators. Short term is 9-day, intermediate term 21, long term 50, ultra long term 100. Moving average is 50 days green, 100 days blue, 200 days tan. These are the colors on my screen. Price versus momentum. Now, price is a general direction prices are headed. Usually pretty easy to figure out, but momentum is the rate of change, and a bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often but not always leads price. Now, technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Keep in mind, technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's get right into the S&P 500. We've got momentum all screaming bearish. And now keep in mind, these momentum signals, when you see a slowdown in momentum, and as some of you know, I've improved the momentum algorithm, been working on this for years, and I'm really happy with where it's at. In fact, we're going to even add some more indicators, hopefully in the next couple weeks, to help you out a little bit more. But do keep in mind, I run these every day. This program I run every day, so we're seeing momentum screaming bearish across the board as of Friday. Price does remain bullish, so this is not to be ignored on the side of momentum. And let's see what we've got over here. So price trend is clearly up. We're at the top side of this massive megaphone pattern, and depending on how you want to draw it, suggesting that we could easily see a revisit of 2100 on the downside if this thing ever goes that low, or we're still up in a bull market. But what momentum is telling you is you can see, price is up, but the rate of that change is slowing down, suggesting that perhaps the next move is lower, which I know it seems unbelievable that we could actually see a stock market go down, but momentum is telling you that, hey, there's some caution in the winds here. Let's go on to the NASDAQ. Nearly similar picture. Price remains bullish, but look at momentum. We have short-term flip bullish. Now, short-term is very sensitive, so I don't usually put a lot of stake on it. If I was a trader, I might, but I'm not. If you are, that might mean more to you than it does me. But look at the intermediate, long-term, and ultra-long-term. We see two flips back to bearish. These are not to be discounted at all. Now, normally the way you'd want to see it is the short-term terms, green, then intermediate, long-term, and ultra-long-term. But the fact that you still have these heavy bearish signals there tell us that the NASDAQ, which should give us almost the same picture as the S&P 500, see, price is up. There's no question price is up, but the rate of that increase is slowing down. And so real hard to do technical analysis when you're sitting near all-time highs on this, but nevertheless, momentum is telling you the rate of this growth is rapidly slowing down. How about the Russell 2000? Boy, I tell you, people are super bullish on U.S. equities. It kind of makes you wonder if that's going to be an overly crowded trade that's going to come unwound really quick. Momentum's bullish, price is bullish, no changes over last week. The world remains, again, super bullish on U.S. equities as, case counts are just going up, and businesses are still closed, states are still under lockdown, but yet people believe that there's apparently a massive amount of pent-up demand that's going to take us way over. This is the part I have trouble from a macro perspective, way over our prior highs. I mean, we can go back and look and say, the market is pricing in an economy that was better than it's ever been in the last 10 years. Now, that is pretty impressive if it's true, but momentum is telling you, price is telling you that, hey, things are good in small cap land. Let's move on to energy sector. Now remember, it wasn't long ago, this was completely green. In fact, it was last week, it was completely green, and things are changing very quickly. Short-term, intermediate term on the price have flipped bearish. Momentum is almost all bearish, turning on red on the short, intermediate, and ultra long term. With just a long-term holding there really is a demand issue here. My insiders in the energy sector tell me there is a massive demand issue still. There's lots of supply, even supply that doesn't normally show up in the EIA and other reports. It's out there, and it's not to be discounted, but speculators and investors see an economic recovery. They see higher oil prices, and yet demand just isn't there. And so we're seeing this potential rollover. Now, from a technical perspective, there could be something here. So what happens is when you get across to the 50-day, which you did here in green, the next thing you want to do is see a confirmation back at the 50-day. And that tells you you're potentially in a rally in the energy sector. So look at what we've got here. We've got the 100-day moving average in blue, the 200-day moving average in tan, the 50-day here in green, all converging right around $35 on XLE. You've got a major zone of support sitting between 32 and 34. So what I would be looking for here, what you want to look for, is you want to see price slow down around this 34 to 35 price level, hold these moving averages, and look like it's going to move higher. That would be an indicator of how rallies begin. If you like moving averages, this is what you want to look for, is a cross and a reconfirmation. On the same token, on the way down, you want to see a cross, and then if this was still a move down, you'd want to see it rejecting here at the 50-day. It did cross through, it got rejected again, made newer lows. So the question for XLE, and this is a big test now, is the market going to take energy higher despite what's going around the world? We're seeing travel restrictions come into play. Or is this a big fake out that's going to see potentially maybe a triple bottom or a retest of one of the recent lows? So real interesting. Momentum is telling you the direction is lower before it's higher, but watch those moving averages. Financial stocks, massively bullish. And this is another thing really interesting to me is people think interest rates are going higher. This is going to be great for banks, and this is going to lead to a lot of lending. And yet you can see from a technical perspective, XLF is running now back into overhead resistance at $29. We saw this gap up move, and then we've seen a lot of excitement over XLF because banks can now, in some limited fashion, buy their shares back for the next quarter. I have a hunch that that's not going to last too much beyond this first quarter. They haven't started buying their shares back, but that usually is a bullish sign for XLF, but not always. And so here you see we've got a cross over the 50 days running into resistance. Moving averages are rising. The 200 days curling up. Would, again, kind of the same with XLE. You want to see a reconfirmation here. The notion that stocks just blast off and never come back and reconfirm, say, a lower level of support down here, say at 25.30 or one of the moving averages is not positive. You really do want some confirmation against something, whether it's a moving average or, again, a level of support down here. But for the moment, XLF is as bullish as it gets. Utility sector once was really hot. Remember, that was all green, and now it's nearly all red. No changes on XLU. Let's take a quick look and see what's going on in the utility sector. And yes, this is certainly looking like it's running into resistance right here. Around $60.50. You can see this cluster. If you're kind of new to technical analysis, what you're looking for is places where there's either a lot of buyers or sellers, and you can see that right here, right around $60.50, pretty much right where it's trading. $60 and or $61, $60 to $61. Right in here, you see all this trading. So this is a level of support right now. If this holds, then it tells you the people that bought here are still there. People that sold there are done selling. If not, then the next move is somewhere going to be down here to around the $58 price level on XLU. How about industrials? Now, we should expect to see this look a lot like the S&P 500 and the NASDAQ, but look at this on the price. We're seeing bearish signals, momentum, no major change there. Intermediate term flip bearish, longer terms are bullish, telling us there's a potential transition here in the industrials. Where is XLI? There it is. And you can see it's making a bit of a rounding top. So it's been riding its 50-day moving average up, 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 up. Now the question is, it looks like it needs another touch here. At would be its prior all-time highs coming back before the big March drop in February. So constructive for XLI would be a short-term move down to its 50-day moving average. If it holds there, it's going to look to go higher. If it doesn't, then it's going to try to find its 100-day moving average down here where you can see a little bit of support. And if not, well, then you've got a bigger move down coming on XLI. How about large gold miners? Market super bullish on inflation, super bullish on the gold miners, but yet momentum still remains bearish. We see prices flipped up, or it hasn't changed, but it's still bullish on the short and intermediate term. Long term, it is still bearish. But look at GDX. It's sitting under its 200-day moving average. Now, this is not really a bullish picture. I mean, the fact that it can't break its 200-day moving average with any kind of power tells you that it's likely to head lower. You can see, it crossed over. Look, crossed the 50-day, right, in green, reconfirmed against it. That's bearish, broke through it, but got rejected. Bearish, touched it, bearish, sitting under its 200-day, bearish. This is not a great picture for GDX. Now, GDX, in my opinion, will likely lead stock prices lower. This, to me, is a red flag for the broad equity market. I'm looking for GDX to come all the way back down into here, if you can imagine that. Some of you are really bullish on this. Imagine if prices get down. I mean, your second next best level of support, right, is sitting here at 32. So that would be where I see this next move most likely going, probability-wise. And then I'm into this cluster of buying right along here. You see this is a consolidation zone where it went sideways around 29. If that doesn't hold, there's no reason this thing isn't back down right into the $18 to $20 range. Could be a major buy at that point. Would lead the equity market lower. How about emerging market stocks? This was super bullish until it's run into its multi-year resistance level. Momentum is bearish on the short and intermediate term, now flipping bearish on the ultra long term. Short-term price is bearish. But really the story for EEM, when I'm looking at EEM, I see that, okay, here's a potential top forming. Maybe it is, maybe it isn't. The bigger picture is this. We're sitting at an either level that if you can break these tops, right? If EEM can break these tops, it suggests that this thing is just going to just rocket higher. Or there's a reason it keeps getting rejected here, and this is a major red flag. Not only that EEM is going to head lower, but when EEM heads lower, well, so does the equity market. And generally what you find is there is a relationship. The reason I'm kind of interested in GDX as an indicator here is if you overlay the two, you find that there is a relationship with them. And when GDX heads lower here in purple, well, it's kind of a red flag to where EEM is going. And then GDX led EEM higher. And now you see GDX and EEM moving higher, and look at this divergence between the two. It tells you that the probabilities lie with the fact that EEM is headed lower, and with that, the broad equity market as well. How about long-term bonds? Hey, Bond King is one of Bond King's favorite securities. Now, what you can't see here, now you see all of this momentum is flipped back red. Remember, it was green. These are all flipped over. Now, what you don't know about this program that I run these screens is something I wrote, and I run it every day. And what you can see TLT trying to bottom here inside the weekly runs when I do this. Now, you can't see it, but I see it. Now, let's go back and take a look here at TLT. And what do we see? We'll zoom into the 6 month, and you can see it bottoming right in here. You can see, looking back over the last year, it's had this bottom right around, 156, 157, going back to June 2020, then again in November, then again in December, and it tried to get down there again, and it got rejected. And so you can see this is what's looking like a bottom. Now, again, the momentum, is close. It's flipping back and forth right into here, suggesting the potential bottom is forming, and this is likely to head higher. Let's go on. And I know, sometimes, because again, I'm running this every day, so you can't see it, but when you run it every day, it does change the picture. How about high yield bonds? High yield bonds tend to follow equities higher and lower, and you can see momentum is flipping bearish on high yield bonds. Let's take a look at HYG. Where'd you go? There it is. And on HYG, price is up a little bit, but the rate of this growth, this trend is slowing down. If we zoom out on HYG, it's kind of sitting right at, near the top of where it's been over the last couple of years. 2018, 2019 traded a lot right into here. As I like to point out, the risk of high yield bonds to me is super high. If you look at what people are getting in return for the risk is a massive 5% yield, to take a lot of risk. And you can see in the past, if you look at what happens to high yield bonds, they can just unwind super duper fast. So I don't think the 5% is worth the risk premium on that at all. Don't think so, but a lot of people do. How about gold? Momentum remains bearish. Price slightly bullish, long-term price is bearish, and we know how this looks because we already looked at GDX. We should see something similar with gold. The only difference is it's sitting above its 200-day moving average. You know, I just can't see how this isn't going to retest this 18 to 1820 range again. It keeps moving down. Everyone thought this was a big bull move, but the momentum behind it, not very strong. How about silver? Pretty bullish on short, intermediate, and long term across the board. Ultra long term is flipping bearish. Let's see what's going on with silver. We got a big move. Everyone thought this is going to be the big breakout move in silver. Maybe it is, but it ran right into resistance up here at 27. That's what it's got to do. Silver's got to break through this resistance at 27. There's no question. It's got to get up in here, 27, get through 28. And so far it hasn't. It's consolidating. It's moving sideways. That can be either bullish or bearish. You can flip a coin. Depending on your positioning is what you want. There's really not a lot of read on that in my book. How about the dollar? No one loves the dollar anymore except us Bond King and Dollar Milkshake guys. Price bearish across the board, but momentum is still, short term bullish on short and intermediate term. Momentum bearish on long and ultra long term. What is going on with the dollar? Because some people say it can head lower. I would say that is entirely possible. Dollar could it get down to 88 here? Absolutely. Some people think it's going all the way back down to the low 80s. I strongly disagree with that view. Of course, some of you say, well, you've been wrong about the dollar since March. I have been wrong about the dollar since March, but I'm bullish on it. When you understand what QE does, I could still be bullish on the dollar, even though since March it's gone down. But over the last 5 years, it's just sitting at the lower end of its trading range. Not really a huge deal. And you can see, wouldn't surprise me if the dollar gets back into this $89 range. It got rejected at 91 here. If it can hold this supply zone where buyers have been at, then it's going to get rocketed back up in this 92, 94. If it can't, then you're most likely looking at, the $88 range on the lower end here. So some of you have complained that my coverage of Bitcoin is terrible because my program does not update. You're right, it doesn't. It does not update over the weekend, even though Bitcoin does. What you see is a consolidation pattern. What we do know is it's traded way up here. I have no stake in this game, so probably going forward, we'll not need to cover it too much since I can't accurately give you what you want. So anyways, thanks for watching. We'll see you on Monday for the macro show. The content of this video provides education information only. It's not intended to provide investment or other advice. It's not to be construed as a recommendation or solicitation to buy or selling security, financial instrument, or participate in a particular trading strategy. This video was prepared by Steve Van Meter, personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advisors Inc. or Steve Van Meter Financial.